All right, good morning, everybody. Nice to see everybody jump on real quick. All right, so I guess why don't we just get started and I'll give you an explanation here on Tuesday. So guys, welcome to the Hurley Investments Trade Findings and Adjustments, May 20th. So as you know, Kevin was supposed to be on Tuesday night. I don't know if he got a chance to say anything other than the email he sent out, but I guess I'll let him go over the details. But basically, one of his sons, broke an arm pretty good on a trampoline on Tuesday evening. So that was the reason for the emergency and the miss there. So kind of a bummer to miss it, and bummer that his son broke his arm. And my goodness, he showed me the x-rays, and it is pretty nasty. So um, poor guy. You know, he posts videos of his kids doing backflips and all of these tumbling and crazy stuff just in their house. And so got a bunch of fearless kids, which is cool, but sometimes that comes back to bite you sometimes. So feel bad for the guy, his son. So keep him in your thoughts and prayers. Hopefully have a reasonable recovery. All right, so today, I'll be honest, it's nice to see an up day, but I'll also be honest that I don't know that we'll see follow through. It's been testing that 50-day on our market. So we've got protection on several positions still. Made some money on the way down. I can think off the top of my head Disney for sure. We can go to a couple charts. Disney for sure. Still have protection on from earnings where it just didn't go up. So nice to catch at a reasonable level right before it goes down. Always nice to catch before it goes down and not have to throw stuff on as it's going down. But it is overbought and kind of looking to hit somewhat of a oh, I got an Amazon order. Here we go, guys. Let me just mute that. So somewhat of a support level here. I would say kind of around just under 170, but so I guess the next thing is to wait to have a day or so where it's really kind of confirming a bounce, right? Kind of both in the market and in some of these stocks. We've got oversold, which is a good sign for a stopping place at some point. Boeing, similar deal. A little more frustrating. We had made a good amount on the way down, pulling protection off as it kind of bounced a little bit right on this pivot point, held for a few days, and then fell pretty quickly below it yesterday, and we felt the need to get 225 puts back on, but we also added 200 short puts just to pay off. It's such an expensive stock to protect. So I'm glad that we did somewhat of a bear put there to see a day like today, hold that pivot point a little better, and give us a better chance to either roll those short puts against the bear puts up for some more credit as it continues to bounce, or just depending on the math there involved, whether it makes more sense to pull protection off completely. What else? Just kind of giving you guys a rundown of things we've been going through. Apple, we made a good chunk of this downward slide from their incredible earnings report, and now stuck between this 250-day and another one. We kind of see a great signal here, closes above the 50-day, and the damn thing goes back down. We got 126 puts on right now, which looked great for the last couple days. Bounced up, touching the 50-day, so they're hitting about break even to a little negative on the puts today. But we just need to see some follow through once again. And man, does this chart somewhat give us a great picture of how frustrating last quarter to 6 months have been in general. Everybody loves this ride up. Everybody loves the wave on the way up. Look how big these bars are. Everything just gets so volatile that nobody knows what to think. Everybody loves these huge uptrends, buying into their earnings, falling because nobody can justify having so much damn Apple in their accounts. And then you get to these days where falls below a technical support point, and then what happens? We get everybody doing the what is the word? Having a total brain fart here. Sorry, guys. It'll come to me. Everybody following each other. Nobody wants to get caught out, and everybody kind of following the herd. Herd mentality. That's what I was trying to get with. Herd mentality, which is what makes these technicals important on the shorter trends. I realize this is a big support level here, just looking at some of these technicals, but I mean, check out some of these 3 to 5 day swings. These are ridiculous. Looks like it's going to go to the 200-day. Starts heading up, if I'm just kind of thinking through what we might have done, hey, it's bounced off this level. Maybe we look at taking protection off. I'm sure there was some head fakes in here. Probably here, right here, somewhere along here. Finally justifying it as it heads above the 50-day. And you think, all right, so finally, through this point, finally, people are starting to see how dumb it was that Apple having record sales isn't just going up. So after a series of consolidation, I think, and the pundits think, and all the other, most everybody that I listen to and hear on CNBC and everywhere else, they think, all right, the stock is now cheap. What a great place to get in. And it heads up. Heads up through just before the next earnings, right here. If I had to guess a day, I'm pretty sure that was it. April 28th or 29th, somewhere. Another record earnings. And you think, yes, this is finally going to continue to go up. Let's see it continue to go up. We're not so darn volatile anymore. Maybe the market is finally being a little rational. And it goes down. It goes down because, man, in general, the market is not believing the Fed that they're not going to have to raise interest rates. Not just Apple, but pretty much, man, a bunch of stocks. It didn't matter if they gave good guidance, didn't matter if they smashed their numbers. So many of these tech stocks just went down. Apple gave great guidance. But how happy am I, as frustrating as all these volatile points are, as frustrating as it is to feel like you're getting a little swung around, to the contrary, how glad I am that we had protection on these points and protection through these points and protection through this point. Yeah, did it come at a cost? This is getting a little messy. I'm sorry. Did our protection come at a cost through these points? Through this? Through this? Of course. Is it fun to see? No, it sucks. Sucks to overpay for protection, but we only know we've overpaid for it when it goes like that and like that. And fingers crossed, this one goes like that. And we have to rely on a couple of these situations where we make some of the downward movement off to offset these portions. And we've got to rely on these portions. In other words, the stock, to pay off our insurance. But I guess what it comes down to is, oh goodness, let me get my pointer back. What it comes down to is, this is last Monday's words. Let me write this out before I finish my point. The point that I have to remind myself, I have to remind you guys, is insurance costs money. Boy, are you glad when you have it, when you need it. But mercy, is it frustrating to figure out when you need it at times. Let's think of car insurance. Obviously, you're required to have car insurance. You always got it. So let's take this with a grain of salt. But guess what? Insurance costs money. Insurance costs money no matter what. It comes at a cost. But the question is, what are we buying it for? We're buying it for these periods. Earnings. We're not buying it to make up a little bit, but in order to catch these periods, you really have to be proactive. For car insurance, it's those big accidents. Does it really help in the fender benders and the little dings here and there? It really doesn't. At least it doesn't necessarily in those moments justify the cost of the insurance. Similar with health insurance. It's kind of required now, but you have the health insurance for those big accidents, like jumping on a trampoline and trying to do a backflip or something and breaking your forearm. Maybe Kevin will have something to say more about this as an example. I look forward to it. But no, it's not for those. It's for the big accidents. Does that mean that it wasn't worth the cost, all those months that you paid and you didn't use it. That's a question for you guys. What do you think? I sure don't like paying car insurance. I never use it. I don't even like paying health insurance. I don't like that it, the health industry is so expensive. It's ridiculous. But again, it's for those March of last year moments. It's for those 2008 moments. It's for those, well, usually it's for those earnings misses, structural changes to a company, etc., etc. It's for those breaking support levels, knowing that herd mentality is going to cause some pain on the stock for a few days or weeks or months. So I'm not seeing any answers come in as I'm rambling on, but it never seems worth it when you don't always need it. I'll put always emphasized. Never seems worth it when you don't always need it. But boy, are you glad you have it when you do need it. The tricky part is sometimes you don't know you needed it until after the fact or when it's too late. But boy, am I glad we protect for earnings, even though Apple should be going up to 200, in my opinion, and it has record earnings, and it just goes down. We don't always get to say what the stock market does. We don't always get to, we don't always have to like when it's irrational. But you can't pretend like just because you look Monday morning quarterback, just because you look retroactively, or excuse me, in retrospect, and say, hey, that cost us money, doesn't mean that it wasn't worthwhile to have it. It protected you. Yeah, it came at a cost later, but it protected you when you had it. And it always helps to remind and remember that when things are volatile like this and it's hard to figure out when protection should come off, Maybe it comes back on. I'm just speaking hypothetically. I don't recall exactly what we did here. I'd have to go back and look. But let's just think hypothetically for a moment. Let me get a different color here. Red. I'm kind of pissed off. Red's a good pissed off color. Maybe we took it off after this big, nice up day. Again, I can't remember. And then after these couple days, crap, we put it back on. And then maybe we had it through this period of time. Well, having that protection on looked good on these days. And then through a month of holding a support level, we took it off here. We might have taken it off at a loss. I'm not going to try to write too much, but I'll just say hypothetically a loss right here. Gain. Oh, look at my handwriting. This is good. This is beautiful. So it did protect us because we didn't know if it was going to go down and test this 200-day level. We didn't know that it wasn't until over here. Or right here when it went up so quick. But right here it was protecting us. It was making up the downward movement. And even though it comes at a loss later on, that was still important. If we're looking at it as protection, if we're looking at it as an insurance, you can't expect that you're always going to guess right or that it's always going to come at a profit. You just can't. The most lying, ignorant people are the day traders that pretend like they always know where the stock's going and then they always make money. We're not trying to trade. We're trying to protect stock ownership. Let me write this a little better. So don't try to trade. Don't look at it as trading. Don't look at it as trying to outguess the stock market. Look at it as protecting the risk. Look at it like insurance. That's how we look at it. And then we have awesome situations like with Baidu, where no, it's not awesome that it went down. At this point up here, you're thinking, oh, finally the market is realizing that Baidu is ridiculously undervalued. And man, we could look at it at 400 and 450 at this point. It's just going up. Finally, it's getting a little love. And then it goes down. And no, we don't always catch the tops. But we did, I have to say, a pretty darn Good job on Baidu. 320 puts is what we had through this period. Through till here. You guys know the story. I went over this in detail Monday. Cashed in puts, added shares. Cover called those shares for a little protection this period in here. Got protection back on. And now we're trying to hold a 200-day. So I hope that gives you guys some perspective and frame of reference, and don't let yourselves get too frustrated when we're not always making up money with the puts, or when it comes at a cost like insurance does. Be glad that we're always trying to find those risks. Be glad that we're trying to seek every advantage we can to protect our stocks and protect our portfolios, so that when it does go down, because eventually it will, we can add shares without asking for more money and have ridiculous portfolio growth, exponential portfolio growth in a longer term. All right. Kind of wanted to go over that, get some frustrations out, and give you guys some thoughts. Those are important thoughts, I think. Trade, I was going to throw on a target for the Kevin Hurley Trust account. We didn't get to go through Under Armour, but Under Armour, another frustrating one the last few days. Bouncing, going up, coming back down, testing support levels. We'll see where it gets. I was going to go to Target. January 23. If I can scroll down, if my internet will keep up here. January 23, 220s. Kind of want it close to the money there. It's closer to 220 than 230 because it's at 220. I'm gonna try to get 31. I don't want to buy 10. So I'll buy 1, knowing that small account like this, Kevin might have to add 1 or 2 more to dollar cost average. Take a little picture here. Guys, any thoughts or questions on anything I've been talking about? It's just a bulk, not a bulk call. It's just a leap long call. Just gonna put it in. Probably get filled right away. Target had killer earnings. They're the fact that it's going up after this huge run shows a lot of faith in all the money they are spending to boost their online presence, which, if you guys remember, is why maybe I didn't go over this, I can't remember. This was their earnings March 2nd for last quarter, or the quarter before this quarter. They spent and said they were going to spend a bunch of money over the next few years on their online presence, and it fell dramatically and proceeded to bounce and take right off. I stupidly got out around here, albeit for a nice profit from earlier. I did not know how the market was going to continue to react, and I was happy taking a profit at the time. Boy, did that look stupid looking back now. And fantastic earnings this time around. They've got good guidance. One of the stocks that's getting boosted from good guidance. No thanks to you, Apple and Under Armour and everybody else. But Target's getting the love, and it looks like everyone's realizing that this money they're putting into their own brands, their online presence, the store pickups and everything, is going quite well for Target. So that's where I was looking at, basically a post-earnings run. But more than that, we've got a couple years in these long calls. Kevin asked me to do this trade because he liked my idea. Just as disclosure, I put this on for a couple of accounts yesterday. So this is more Kevin's trade for you guys today. Following the earnings run and the idea that Target will have a longer term positive picture. Let me get my screenshot, and then really that's it for me today. Didn't want to go too much further than the half hour, but that's what we're looking at today. Man, do I feel dumb I didn't keep those targets longer, but we do have a better picture now, and I feel like if it doesn't go up, we still have the long-term picture. We can dollar cost average and have the time to do what we need to do. So there you go. Guys, any thoughts or questions? Speak now or forever hold your peace. As always, if you're doing something like this, you got to leave room in your account with cash to be able to buy another one or two to lower your cost basis a half, quarter to a half, and have a better chance of being profitable going forward. All right, guys, that's really all I had. Excuse me. That's all I had for you this morning. Unless there's any last questions, I am gonna leave it there. Leave this on for just a minute. It's not a complicated trade. All right, guys, I'm not seeing anything come over for questions. Thanks for joining me this morning. Thanks for giving me a chance to vent and feel a little upset and talk myself and talk you guys through it. Let's hope for the market to continue to bounce and we can take some protection off for some profit, if not getting back a bit of what we paid for, and keep doing what we do. All right, guys, that's it for me. Take care. Thanks again. Again, I hope to see, pretty sure we'll see Kevin back for Monday. He said to say sorry that he couldn't be there Tuesday, and we'll go from there. Take care. Have a good weekend.